Hello and welcome to another one of our video blogs where we answer the questions that we have received from our NPO business network, which is a Facebook group where we discuss running a business within a non-profit and using that as a form of income generation for sustainability of your non-profit organization. So if you're receiving this video outside of the network, we'd love for you to connect with us, come and join our network, share our videos, like our videos, and most importantly, comment. So today we are answering a question that says, what does financial compliance mean? This is going to be a bit of a technical video with a lot of information in it, so you may want to pause and write things down, and I'm going to try to go through it carefully, but it might be quite fast. So compliance, just as a general term, means to comply with, and in our case we're talking about complying with the law. So there are a number of laws that will govern the operations of a non-profit. The most common one is the Income Tax Act, the Basic Conditions of Employment, VAT registration, all of those SARS-related acts, as well as the Non-Profit Act, and in some cases the Companies Act. So when we're talking about compliance, we're talking about how well do you as an organization meet the requirements, typically annual requirements, of the laws that govern your operations. That is a very big, very broad question. So today we're going to focus on the financial aspects of compliance, because if we start talking about the labor compliance requirements, for example, we will have a very, very lengthy video. So in terms of financial compliance, all organizations need to comply with the Income Tax Act. Okay, if you're a public benefit organization, you need to submit your annual income tax return. It's an income tax return for exempt institutes, so even though you are exempt from income tax, you still have to submit a return. If you are not a public benefit organization, then you need to submit the 2 provisional tax and then the final income tax return to state all of your income and your expenditure to SARS. If you're an employer, you need to ensure that your PAYE payments are up to date. There are 12 monthly returns, an EMP 201 return, which is the submission of your employment tax, as well as UIF and SDL. Those are then submitted, the return and the payment is submitted to SARS on a monthly basis. If those are late, you're now no longer compliant. Further to that, SARS requires that every 6 months we submit a reconciliation, an EMP 501 return. And that's a reconciliation between what we state we have paid to SARS already in employment tax against what the payroll records say is due per person. And then when we do the second one, which is in February, it is against the IRP5s which we issue to the staff. So the IRP5 will state the tax that's been deducted for that individual, and that must tie up, the sum of all the individuals must tie up with what has been paid across to SARS for the whole year. So there are quite a number of compliance requirements when it comes to employment tax and employing staff. If you're VAT registered, then every 2 months you need to submit a VAT return. The return and the payment are due. Those are the requirements when it comes to SARS. There are 2 further requirements in terms of employees. The one is with the Department of Labor for UIF. So we have a funny system where the Department of Labor administers the UIF fund, unemployment insurance, but the SARS actually collects the cash. So on a monthly basis, you pay SARS your UIF, but we are also expected to prepare and submit a declaration to the Department of Labor stating which individuals that UIF payment relates to. So that is a monthly compliance requirement. Further to that, there is workmen's compensation, which is also administered by the Department of Labour, and that's an annual return that is due, stating the remuneration for your employees in the past year and your expected remuneration for employees in the next year, and you pay a fee for the workmen's compensation. Workmen's compensation, for those of you who don't know, is a fund that you can apply to should an employee be injured while on duty at your workplace. So on an annual basis we contribute. The rate depends on how risky the Department of Labour determines your type of work to be. So if you have office staff, the rate is much lower than if you have drivers and so forth. So on an annual basis we contribute to that fund, and then if there is an accident or something that happens at work, you are able to claim compensation for the employee out of that fund. So we've covered the SARS ones, income tax, PAYE, VAT. We've covered the Department of Labour ones, which is UIF and workmen's compensation. And then there is the non-profit directorate one, the annual return that needs to be submitted to the department, which includes your annual financial statements as well as a narrative report. And then if you are a non-profit company, there is an annual return that you need to submit to the CIPC, the Company's Intellectual Properties Commission, and a small fee that you pay. And that is sort of to maintain your registration with the CIPC so that you stay active and that you continue to be a registered non-profit company. So those are the compliances that you need to be aware of as a non-profit organization and need to submit on either a monthly or an annual basis. The one thing I would like to mention in terms of the tax clearance. So if you have everything paid up, submitted, then you can apply for tax clearance from SARS, so which is basically a statement to say that everything is correct and is fine. There used to be a document that you could then print out and submit to your donors. A lot of people ask for that. Now SARS has done away with the document and they issue out a PIN. Using that PIN, the supplier or a donor or somebody can log in and check that your status is up to date. Historically, the certificate was valid for a year, which is quite handy because you print out the statement now, 3 days later you're late on your VAT return and you're no longer compliant, that certificate is still valid and you can send it to donors and so forth. With the PIN, it is now a moment-by-moment check, so that when a donor uses the PIN and logs into e-filing and checks your status, if it is not compliant at that moment, then it will not show as cleared tax clearance status. So you are then notified whenever you are something is late or something not submitted, and it is imperative that you rectify that situation as quickly as possible so that you are not jeopardized in your funding or in your tenders or other things like that where you need a tax clearance because something is slightly late or needs to be rectified in a period that hasn't been done yet. So that hopefully wasn't too much or too fast and too over your head. So just take cognizance of these are the things that you need to put in your diary as due, and make sure that they are submitted on time and that they're submitted correctly so that the simple matter of submitting return doesn't jeopardize your income and the sustainability of your organization. All right, if you have any comments on how this has been a challenge for you, or if the way that SARS has changed the system has impacted you, we'd love to hear from you in the comments. Or if you have another question you'd like us to deal with, please also leave that in the comments. All right, have a good day. Bye.